Welcome back, everybody. This is your designated Inquirer. My name's Axel, and welcome to another market day. It was a bumpy Friday, to say the least. A lot of things happened. The majority of the things that happened that were kind of important happened yesterday and earlier in the week. But to close off the week, we do have basically a gap open, meaning that sometimes a stock can either go up and or down overnight and open at a different place that the stock had not been prior to the open and or close of the previous day. So it can gap open or down. And so what that looks like from the outside sometimes is, lower this real quick, is a gap open. So it can go dramatically, it can open dramatically lower from where it had closed the previous night. A lot of times when people see a daily chart, that information is kind of lost. So it looks sporadic. So right here you see a lot of gaps on the in-betweens, the stock and stuff. You'll see dramatic opens and closes, vastly different from where they were the day before. And this is what happens when we basically have 24-hour a day periods where stock can basically trade 24 hours a day, like the Nasdaq, like the Dow Jones, that is basically traded on an international level. So depending on whether or not you're trading in the Nikkei, which is in Japan, the Hang Seng, which is in China, the FTSE, which is in the UK, depending on whether or not you're trading there, the stock is going to move up and or down depending on in which part of the world, or if you're in India. Point is that humans live all over the planet and in all different types of time segments, etc. And so they're going to trade it and trade on the same information that we get and carry it, continue on the movement that we probably propagated during one part of the day. Since yesterday was so bad, overnight the rest of the world had a time to digest basically what happened and continue the movement, and it basically gapped lower. Gap opened lower. So that's what I mean by that. That the rest of the world took time and basically had a turn each to sell and or buy, depending on the news that we got, and came to a decision on their own as to like what to do. And even in the earlier hours of the day before we even open, in between what would generally be like the UK closing and us opening, basically the span of time of like the width of the Atlantic Ocean, sometimes there is a time where people generally trade that's really in between. That's where you'll have like actually close to zero volume. Down here is where you see the volume. There it'll still look like it, but compared to what's happening during the day, it's close to zero. So these are like dead times where basically it's not that people out of the ocean are trading, but like almost nobody is trading. It's a very light volume that happens to make an impact on the major indices that carries most of the stocks in the traded in the United States through the New York Stock Exchange generally. And then there's, depending on which stock exchange that you're talking about, because there's the New York, the Chicago, San Francisco, and there's a couple other ones that are notable for the United States. But in any case, that's what a gap down is, in case you wanted to know. Tech sector generally, this is the tech sector here with the QQQ, is it's a microcosm of what is the Nasdaq, and even which they both basically mirror each other, and it's a subset of tech sector stocks. So the tech sector was the one that basically that gap opened the lowest, and at the very early morning continued that movement to the downside, to give us a new low of 25.51 and 32 cents, where our previous low was set. I have to come out a little bit over here, and this line over here, which used to be at 252.76. So we did get a new low. So what we technically have is, as the stock market was going up, it had a higher high. Then we finally got a lower low. And now for the trend to generally shift on a daily time scale, for the stock market to kind of shift direction, the stock market will move depending on trend changes at different, what they call, time scales. So whether or not you're at 1 minute, trading at 1 minute intervals, 5 minute intervals, 15 minute intervals, so on and so forth, till you get to basically the daily, the weeklies, and the monthlies, where we're basically looking at like all of human history a month at a time, is how traders basically try and establish what a trend is doing. And right now, if we were to look at our the last, since basically 2015, what we got here, this looks like a topping out candle, meaning that it rushed up really fast, and now it's having a tough time maintaining that the velocity that I had. And so it looks like is swan diving off of like a trampoline or something like that. That's generally what this candlestick would say if we're talking on a monthly scale. So again, we're going from the 1 minute. On the 1 minute, generally people would consider a trend. For example, this subsection right here, we'll take this as a learning opportunity. Generally, when you're on a downtrend, you will make a lower low, compared to before, a lower high, and then again a lower low. In this case right here, it was a higher high than this one right here, but the next turn downward was a lower low again. So the trend got saved, and again a lower high, because this high right here is lower than this high right here. This low right here is lower than this one right here. So you have a trend continuing onward, and this is on the 1 minute time scale. You go to the 5 minute, same thing for the same period of time can be said. Although now the chunks are harder to distinguish because they're 5 minutes at a time, right? Sometimes you still kind of like eke out some of that information from how the candlestick looks like. In any case, what's important about this is that now you wouldn't take the whole, you would look at like now a wider period of time, and you could kind of discern where the time change, where the trend was changing depending on the time scale. So here it's more easier to see the upward trend in bigger blocks, like as to where it happened. Here's, you can continue the uptrend up until you could no longer get another higher high off of a 5 minute time scale. And so it depends, sometimes people, depending on whether or not they're trading in the microseconds, whether you're trading a minute at a time, whether you're trading on a daily, whether or not they're long-term investors and they like to trade on the daily, etc. Like, it's the time horizon is super important when you're trying to define what your strategy is, what your goals are, and what what factors you're looking at as to what can affect your strategy. And that's trading in a nutshell. You have to define your time scale, you have to define your strategy, you have to define the variables that can affect your strategy, and then you take a position. You take your starting position of where you would like to enter and when you would like to exit a strategy. But a lot of being able to make a strategy starts with deciding what time scale you want to look at and where your strategy starts to break down. That's time scales. There you go. But again, so if we're looking at today, and into what happened here in terms of on the daily time scale, where we had a low here, a higher high, higher than this, a higher low, which is higher than that, and then an even higher high, which is substantially higher than this, a higher low, is substantially higher than that one. Now, what we should have seen to continue that movement should have been a higher high, which we did not get. And what we did get is a lower low. Now, a lot of people, depending on how you want to look at it, if you want to exclude the candle wicks, which is this little skinny part right here, compared to the body of the candle, it's still valid, because we had this body right here is lower than this one, and even in being able to say that we had a lower high, and now a lower low. So now this is the first time where we've actually been able to a little more concretely be able to say that the trend is changing. And so the probability may increase that the trend is changing to a bear market again, in that the dips are going to outnumber the rallies. And so you may get something like this again, or it could be a short one like this. It depends. It depends how bad it gets. It depends what the variables are going to be spelling out, etc., like that. But again, if you're looking for specific advice on what to do with your portfolio, etc., whatnot, do not go to me for that advice. I'm just putting out my opinions as to what I see can happen, statistically speaking, probabilistically, depending on what I see in terms of like the variables in the economy, things like that. But do not use me as your sole reason to take action in the stock market. Please consider asking a financial advisor, somebody who has been formally trained in acting in the best fiduciary interest for you, because that's what somebody licensed as a financial advisor is. They're trained to keep your fiduciary interests at heart, hopefully, because even that can sometimes be in question. Yeah, it'd be that way, and we know this. It'd be that way. Anyway, so this has been your Friday, and we'll look to the weekend as to what happens, whether or not LA or California ends up shutting down, as Garcetti was basically spelling out earlier this week. That's it. Till next time, stay safe, stay healthy, and wear your mask. It's crazy out there. All right, guys, take care. Bye.